Hello, welcome to this cryptocurrency masterclass by Lixa Crypto World. Okay, Lixa Crypto World is a platform, a cryptocurrency platform where you get to learn about cryptocurrency. You get to learn about how to trade, how to invest in cryptocurrency by yourself, and also trade the spots and the futures markets. All right, and today we'll be having a cryptocurrency masterclass. This is a complete beginner's guide to understanding cryptocurrency. It doesn't matter if you're you're a novice or you don't know anything about cryptocurrency. This class is actually meant for you, and it doesn't matter if um, you don't have the right gadgets to get access to this cryptocurrency space. It doesn't matter. We're going to take everything from scratch. Okay, taking everything from scratch and getting you well acquainted with the crypto space. So in this cryptocurrency masterclass, we'll talk about a lot today. I'll get you acquainted with a lot. In case you don't know, my name is Maurice, and I'm going to be your host for this session. All right, so we'll talk about cryptocurrency. What is cryptocurrency? We'll take into consideration the history of cryptocurrency, the changes in value, terminologies to know in the crypto space. We'll also talk about the blockchain and how the blockchain works, fundamentals of cryptocurrency, the differences between the fiat and the crypto, differences between coin and token, okay? For you guys to understand that these are two different projects on their selves, okay? We'll also talk about the top cryptocurrency and understanding market capitalization, advantages and shortfalls of cryptocurrencies, and how to store cryptocurrencies on your software, hardware, exchange, and we'll talk about DeFi and functions of DeFi. Then we also talk about the scams to avoid in the crypto space and safety measures to actually protect you from losing your wallet and your seed phrase. And we'll talk about exchange and how to set up this exchange. So stick with me to the end of this class and you'll learn all these. Alright, so we'll move into the very start, which is what is cryptocurrency. So as you might know, or those who do not understand cryptocurrency is actually a digital or virtual cryptocurrency that is issued and secured by cryptographic technique, and this makes it almost impossible to counterfeit or double spend because transactions of cryptocurrency is actually embedded on the blockchain, and the blockchain stands as the main cryptographic technique used in this context to secure these funds, making sure that it has a very high rate of anonymity, preventing hacks to the system. All right. So we'll go into the history of cryptocurrency. Now, one thing I want you to understand is before we started having the first cryptocurrency, which is Bitcoin, before the advent of Bitcoin in 28 to 29, we already had the blockchain already. Okay, so it's not like Satoshi Nakamoto, the scientist who created Bitcoin, the programmer who created Bitcoin. It's not as if he actually was the very first one who brought the whole idea and protocol of Bitcoin. He was actually working on pre-established fundamentals like the blockchain and the smart contracts. Okay, so in 2008 we had the first domain by the name bitcoin.org, which was registered with a name known as Satoshi Nakamoto, and this person is actually the creator of Bitcoin. Now, before this time, we had other people who had already been in this space. We had like for instance, the blockchain technology started way back 1979. Okay, where Ralph Michael came up with the market tree, while smart contracts were first proposed in 1994 by Nick Swabo, an American computer scientist who later invented a virtual currency as at 1998. Okay, and this virtual currency was called BitGold, and it did not stand the test of time for a long time and failed. Okay, so it has been like 10 years. It has been 10 years from that period of time till when Satoshi Nakamoto came up with, adding these protocols, making use of these different established protocols. You get, so he was just like trying to like modify these protocols that has already been in existence, right? To make sure he used them to create his own cryptocurrency, what we have as cryptocurrency now. And as at 2009, we had the very first transaction, okay, for Bitcoin. So in 2010, we have the very first marketplace was created, like an exchange, okay, where one could easily buy and sell cryptocurrency. That same 2010, we started having like in May 22, there's this World Pizza Day, which is marked on every 22nd May of every year. We celebrate it like we call it World Bitcoin Day. Okay, it's actually a day where a young man called Laszlo bought two pizza for 10,000 Bitcoin. Like he carried out these transactions online, like transferred 10,000 Bitcoin just to buy two pizza. And today, making use of today's worth of Bitcoin once went to $60,000. All right, but at this moment, as at the point of making this video, Bitcoin is around $48,000, and for that 10,000 Bitcoin, that's going to be around 48 million US dollar. All right, that's at $48,000 each. So in October 16, Bitcoin was purchased and traded as a currency, for the very first time. November 6, Bitcoin capitalization went up to as much as $1 million. That was the very first time the Bitcoin market cap rose to that extent. Okay, in 2011, as at February, we had this time where Bitcoin equal to $1, and the total market capitalization, the total market cap, reached $10 million. So other cryptocurrencies, started springing up, making use of Bitcoin algorithm. All right, in that period of time. All right, so we started having coins like Namecoin. Namecoin was actually the very first coin, this first altcoin to be created, making use of Bitcoin algorithm and protocol. You get, so we started having Namecoin, Litecoin, and the rest of other coins that came up. We started having different coins. All right, and that was till 2013, and we had rise of other marketplaces for trading Bitcoin. We had other exchanges springing out at the moment, and of course in 2013 we had one of the biggest volatility ever experienced in the crypto market, where Bitcoin rates reduced, like it fell down by 80% just within 24 hours. In 2014 December, the Bitcoin rates reached $310 for the very first time and was considered a stabilizing era for Bitcoin, which was a sign for the cryptocurrency strength. Okay, because other coins too were actually created at this point, and the need to get more of Bitcoin was like getting more. So many people opted into adopting Bitcoin at that moment, and the prices started stabilizing. Okay, so in 2015, really had excess of this coin, coming out, and it was really a favorable moment for other digital currencies developments. Like for instance, Ethereum. Ethereum came up as at 2015. All right, and during that 2015, the price of Bitcoin exceeded $500 also at that moment. So in 2016, we started having ICOs. Okay, that was when we started having ICO in 2016. Now, what is an ICO? An ICO simply means initial coin offering. It's a process whereby developers you get come together, they create a coin, and in order to fund this project, they come up and they tell the community, okay, we have a coin we are creating. So if you guys want to invest in this coin right now, you are going to be the early investor. So what you're going to do is you send a particular currency to their wallet, their pre-sale wallet, and they will send you a token, the coin itself they are creating. Do you understand? Even Binance had an ICO because they had to, when Binance launched, they launched around 2017. That was when Binance was launched. And during that time, they had to go for an ICO, all right, where they were giving out these coins. And those who opted in, who joined the ICO, like to buy as the early birds, bought around 0 points. It was like 1 cent as at then. That's like 35 naira if you compare it to Nigerian currency. Okay, so ICO is actually you're coming up with your own project. For instance, you don't have much to fund this project for listing on exchanges, marketing, and all of that. Okay, you come up with your white paper, they come up with their white paper and show the public. You get, okay, do an AMA. An AMA means ask me anything, where you be asked questions and you give answers. You hold live sessions, videos, and all of that, and voice chats with the community. And these people, the early investors, actually invest in this project. Now, investing in this project, they are sending a coin. For instance, an ICO in BEP20 tokens. Okay, for instance, you want to create a BEP20 token, and you have a use case, a very good use case for this. You opt in for a pre-sale. All right, that's going to be like an ICO. Okay, and the entire community is to send BNB, which is the Binance coin, to a wallet address. Okay, in turn, those who send those BNB across, all right, you might get this information that to join the pre-sale, you need to send 0.01 BNB, okay, or 0.1 BNB. That's the least, that's the minimum to participate. When you send that BNB, you get a coin. This coin has no liquidity in it at the moment, okay, until the project has been completed, the pre-sale has been completed, okay, and the hard cap is met. That's when they will now add liquidity to the project, to the coin that you're holding, and it starts going high. Okay, so in 2016 we started having projects coming up with these fundamentals, with this mindset of this ICO in order to establish their project. So Bitcoin increased in value by approximately 120%, and the exchange rate fluctuated around $350 to $400. Okay, so by mid-June, the Bitcoin rates doubled to $720. Market capitalization exceeded $15 billion for the very first time. All right, so in 2017, we still had ICOs. Like I said, that's when Binance actually Binance, which is the world's biggest cryptocurrency exchange, was established in it was launched in 2017 around July, okay, by Changpeng Zhao. That's the CEO, CZ. Okay, so Bitcoin price reached an all-time ATH of 19,650 as at 2017, and the market capitalization went high to $800 billion. And during that time, as at that time, we had over 1,500 cryptocurrencies launched, okay, already on Coin Market Cap and other um, coin listing platforms, okay. And in 2018, we started having market correction. Now, when we go back to 2017, okay, this ICO, the year of ICO boom. Now, we had a lot of scams coming out because most developers just come up and you see someone telling you, I want to create a coin, okay, to invest in my project. You're going to send me, let's say, BNB or Ethereum, okay. You're sending the person, let's say, 5 BNB or 20 BNB, okay, because BNB as at then was a little bit cheaper, all right. So let's say someone sends 5 to 10 BNB to a pre-sale address and gets this coin. But at the end of the day, these developers, they don't add liquidity to that coin. They end up disappearing with your money and it's just gone. And once that happens in the crypto space, um it is very hard to get hold of these guys, of these developers. That's it. And there were loads of scams. And now in 2018 we started having market correction because those projects that have actually rock pulled, they will not stand the test of time. Those fake and the scam projects don't stand the test of time. Secondly, they don't even have a huge market capitalization, huge market cap, okay. So they started falling and closing up, all right. So, and the need for the creation of stablecoins to protect investors, traders, from the high volatility in the market increased. Okay. Now, what is a stable coin? A stable coin is a coin that is pegged to a real currency. Okay. It is pegged, most stable coins are pegged to the value of dollar, like the Theta USDT, BUSD, Binance USD coin is pegged to the value of the US dollars. So one USDT is equal $1. All right. So these coins are actually meant to protect investors and traders from the high volatility in the market. What do I mean? For instance, you're trading Bitcoin USDT. For instance, okay, let's say you buy Bitcoin. All right. You bought Bitcoin at the rate of let's say for $40,000, and the rate of Bitcoin started going, the value, it started appreciating in value. Let's say it goes up to $50,000. You already have 10,000 as your gain, right? Now, because we have volatility in the markets in crypto space, that price might start dropping, might start coming down again to like 45,000. So, and you don't want to lose what you've gained already. Okay, so what you need to do is you need to trade these Bitcoin, like swap it. It's like a kind of swap. You understand? You're swapping it. Let me use that term, swap, because it's more simpler. Okay, I won't say trade, but the normal term to use is trade. You're going to trade the coin for USDT. All right, and you get 1,000. You get 50,000 USDT and hold. Okay, should in case there's a sharp drop in the market, you still have your 50,000. Okay, and when the market has fallen down, you can go back and buy at the lowest dip, and you'll be in profit when the value increases again. Okay, so that's all about the stablecoin. Now, we started having a shift from ICO to IEO in 2019. Now, what is ICO and IEO? Like I said, ICO means initial coin offering. IEO means initial exchange offering. Now, it is a situation whereby um, uh, investors or developers who want to create a coin, because since many developers are like making use of this ICO as an exit scam. They just come into the space and they tell you, look, I want to create a coin, and if you want to invest in my coin as the early investor, okay, this is what will happen. You need to join our pre-sale, and you're buying this coin at the pre-sale rate without value. It has no value at that point. After the pre-sale, that is when they will now use most of the BNBs. If it was actually, if you had made this payment through BNB, they will now use that BNB to like a fund to add liquidity to the project on PancakeSwap. Now, what happens to the developer if he changes his mind? Like, for instance, 1,000 persons would just up into a pre-sale website, and they meet up the hard cap, which is like 1,000 BNB today. Okay, and these developers will be stricken with greed, and he or she will like, wow, this money is huge. How do I return back this money into the liquidity pool? Part of it, let's say like 50%, and make use of 50% or 20% for marketing and all of that. He or she decides to disappear into thin air, and your money is gone. It is happening till today. Now, that was the reason we started having the need for initial exchange offering. Initial exchange offering is a process whereby the developer himself is not actually listing out this coin to the public. He is going directly to the exchange, like Binance. Okay, you want to list your coin, you want to list out a new coin to the market, you go to an exchange like Binance. Binance is the world's largest cryptocurrency exchange, and if you're doing an IEO, if a project or a development team is actually launching on Binance, okay, for the very first time, it's going to have huge investors, and people will like, wow, because they really trust Binance to an extent. Now, using an IEO, the funds of investors is actually very safe because there's not going to be any rock pool. All right, the exchange takes charge of almost all the activities. Okay, the funds that are being raised is actually being raised by the exchange. All right, so the interest of the investors is really protected. All right, unlike the IEO whereby anyone can just list any coin anywhere, is it on pink cell, anywhere, and investors will just go there, buy the coin without value. You're paying for a coin without value, hoping that the developers will add liquidity to this coin, will add liquidity so that you start seeing your value reflecting. All right, but at the end they just disappear into. There are so many projects I have I have joined in the past that actually rock pulled. All right, so that was the need. That was why we started having the importance and the needs for the IEO. All right, so in 2020, we called that here. 2020 became a year of decentralized finance, DeFi. All right, a year where we started having much about decentralized finance, everything about decentralized finance, and Bitcoin reached $11,000. So now, without wasting much time, we'll go into the value. All right, we'll go into the value of cryptocurrencies. That's the changes in value of cryptocurrency. All right, so we are going to start from the very onset when Bitcoin was launched. Okay, in 29, as at then, Bitcoin was almost worthless. Okay, I hear people say, and I read about it, that you could mine over 40 Bitcoin per day. Okay, back then, I think it's hourly. You could mine over 50 Bitcoin. But as it increased, as it started having value, the mining rates became a little bit hard, okay, and reduced. So in 2010, Bitcoin was not up to a cent, it was 0.01 dollar. Okay, that's like 3.5 naira. So now back then, if you and I were really exposed, were opportune to understand much about cryptocurrency, and we bought, let's say you bought 1,000 Bitcoin as at 2010, that would have been just $10, and 10,000 Bitcoin would have been just $100. That's just it. Like, that would have been the money you would have used to buy this coin back then. And in 2013, you could see the price increasing from 211. It went up to $1. 2012, it went up to $13, which was 4,500 naira at the time. In 2013, the price of Bitcoin increased to $120, which is 49,000 naira, using the dollar rates as at then. Okay, and you could just see for yourself the price increasing up to 2017 when it hit $1,000 to $16,000, and that's like from 350,000 naira to 5.6 million naira. It went up high until 2020, okay, when it hits $27,000, and today Bitcoin is trading around $48,000 to $69,000. So we'll go over to Ethereum. Ethereum launched as at 2015, okay. Back then when it launched, it came up with it launched after a month when Ethereum launched, okay. It went up to 5 cents, okay, $55.56. That's like 195.96 naira. Okay, one would have easily gotten how many? One would have easily gotten in like 100 of it, or 54. Let's say 54 Ethereum. Okay, 54 Ethereum would have gone for $108. Okay, and today, just punch your calculator, you'd understand how good cryptocurrency is over a long period of time, the high potential it has. Okay, so in 2016, Ethereum equaled $2 and went up to $18. That's like 700 naira to 6,300 naira. In 2017, Bitcoin went down, like it came down from, it went up from $18 to $600. And you can see in 2018, it hits $1,200 for the very first time, went down all the way to $600 in 2020. And today, as we speak, Ethereum is trading at $4,000, which is 1.6 million naira. All right, so we'll go over to BNB. All right, so when BNB first launched, after their ICO, initial coin offering, they even did an airdrop where they gave coins to some persons. For those who don't understand what an airdrop actually means, an airdrop is issuing out cryptocurrency, okay, a certain specific amount of cryptocurrency to new holders in order to create a huge awareness of that cryptocurrency to new holders. Okay, so they had airdrop and all of that, and they had their ICO where each coin went for 35 naira. Okay, so back then, that 2017, it would have been very possible for one person to buy 2,000 BNB for just $200. All right, just $200. It would have been easier for you to. It would have been very possible for you to buy 2,000 BNB, and you could buy how many? You can buy 4,000 BNB for just $400. Sorry, And at the other side, it would have been easier to buy around 2018 because it went over to $9. It was still very cheap, and that's like 3,000 naira. In 2019, it went up to $20. That's like 8,000 naira. And 2020, it hit $30 and went up straight in 2021 to $663 as we speak. All right. So with this, you get to understand that cryptocurrency is actually um very it has a very high potential to move higher and make you gain a lot. Okay, so we look about few terminology. We look into few terminologies in the crypto space. Okay, we have these are kinds of words, in every field, any field of experience or doctrine or teaching. You understand? We have different terminologies used. Okay, these are all words people in that field make use of. We have so many of them. Okay, I can't just start listing them, all of them, because it is very long. We have over 50, over 70 terminologies if you're going into trading aspect too. Okay, we have moon, we have whale, we have lambo, we have ATH. ATH means all-time high. All right, and we have all-time low, ATL. All right, we have TA, technical analysis. We have FA, fundamental analysis. We have BTFV. Okay, let's just look at this one. I put down here. We have the hold. So hold is actually gotten from the word hold on to dear life. All right, it's the act of holding onto a coin for a long term. Okay, when we talk about diamond hands, it means holding onto a coin for long and not selling. As when you hold onto a coin for a very long time, it means you have diamond hands. So we go into dip. A dip is actually a situation whereby a coin falls in value. It falls much in value. And when we have pump, it means a massive movement of a coin in an uptrend due to much buyers. So dumping means massive sharp downtrend movement of a coin due to much seller. Like when everybody is actually selling, it means. So we also have food, which is fear or uncertainty and doubt. That's when people start spreading mostly informations about a project to actually bring it down, or they start just spreading fake news. Most times it's all fake news, and most times it's not fake news. So it's actually saying things that will actually make a project come down. And when that happens, like even the value, it affects the value. Most time food comes from the media, social media, and most influential persons. Okay, like Elon Musk can say something and he can create a food on any cryptocurrency he wants to, and it's going to work. All right. Now, FOMO means fear of missing out. A situation whereby, let's say, a coin is actually being launched, and you've heard so many positive potentials about that coin. Okay, but they say, this coin is going to be listed tomorrow on one kind of exchange, and when that happens, let's say it's going to be launched, it's going to be listed on Binance. You understand? Binance is the world's biggest cryptocurrency exchange. Come on. And if a coin or a token is being listed over there, it causes FOMO, fear of missing out, because it's going to moon instantly. And let's say you can actually buy this coin through PancakeSwap or any other exchange like MEXC exchange before it's been listed on Binance. Okay, you don't want to miss out. All right, and that process, that acts, you can simply tell someone, or you tell anyone that at this moment the coin is on FOMO, like everyone is fearing to miss out. Okay, now JOMO means joy of missing out. Okay, and this happens when you did not partake on a particular project. You understand? Most coins, most projects turns out to be bad investments. Okay, let's say someone tells you to buy a coin, that this coin will go up in value the next day, the next month, and all of that, and you buy that coin, or you did not buy the coin. Let's say some other persons, most persons bought the coin, but you missed out. Maybe you did not have money, and at the end of it, let's say the coin was trading at $1 and you missed it. You wake up the next day and you check the charts and you discover the coin is down. All right, maybe it has lost 40 to 50% in value, and you'll be very happy you did not get the coin. So that situation, that point, at that point, you're in JOMO, you're rejoicing because you missed out. Okay. Now, when we say NFA, it means not a financial advice. Okay. So NFA means not a financial advice. Okay, and that's why this is so is because the crypto market is highly volatile. Okay, you might say one thing today based on your understanding, based on your fundamental analysis. You might check it out and you see an high potential coin, and you're like, this coin is going to um, go 10x, 20x, 100x, and all of that. And at the same time, it might change and go down, like go way down beyond your expectations. So we like telling people, not financial advice, not a financial advice. So if you're going into any project in cryptocurrency, if you're buying any coin, you should understand very well the disclaimer, which is trading at the very first beginning. You should understand that trading cryptocurrency is very risky. All right, you might lose everything, but do not worry about that. We'll get to that. Okay, now DYOR, do your own research. You should always do your own research. When someone tells you about a coin, you don't just go in to buy that coin. All right, you don't just go in to buy that coin because you're being told this coin would do 50x. Okay, you don't know who created that coin. Anyone can create any coin so long as DeFi is concerned. Okay, I can wake up tomorrow and I decide to create my own coin and create FOMO on it. All right, make sure everyone up into that project. But as a good investor, once you've been asked to buy any coin, or once you're given a coin to buy, to invest in, you need to first do your own research. So we have other terminologies. We have like whale. A whale is actually someone who's holding a large volume, a large bag of a coin. What is bag? Bag is when you're holding a large quantity of a specific coin. All right. We have ATH, all-time high, a situation whereby a coin has gotten high to an extent, like it has gotten high in value. Now ATL, all-time low, is actually a time, like within the time frame. This ATH and ATL has time frame. We have the 1 minute, 5 minutes, 10 minutes, 3 minutes, 1 hour, 3 hours, 4 hours, 1 day, 3 days, 1 week, 1 month, 1 year. Okay, so the all-time high for a period of time of 1 hour is different from, might be different from 1 day. Okay, so it actually tells you the overall time, the overall high the coin has gone in value, and the overall low, price, the value of that coin has gotten down for that specific time. Okay, we have FA, which is fundamental analysis. When we talk, we say go and okay, go carry out an FA on this coin. It means go and do your fundamental analysis on this coin. TA means technical analysis. We have another one, CA. When someone tells you to buy, let's say a BEP20 token on PancakeSwap, and he or she drops a string of words, letters with digits and all of that, 0 times 8 E and that blah 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 downward, and he or she tags it CA. It means contract address. Okay, so that's the few terminologies we take. I have a crypto book where you can lay hands on and you get to understand more about the terminologies, okay, and you can also do your own research on it. So we'll move into the blockchain. All right, so the blockchain, okay, I start from here. So in a simple term, the blockchain is actually a distributed ledger where all crypto transactions are verified and recorded, stored with high encryption, security, and anonymity. Okay, and it is the underlying technology behind cryptocurrencies. Now, when transactions are being carried out on the blockchain, okay, it is very hard to tamper with it, because if you want to tamper with any transaction, let's say you want to hack, if one needs to hack the blockchain, you need to hack the previous block connected to that blockchain, to this block you're intending to hack. All right, and I'll explain that on how the blockchain works. I'll explain that when I get to how the blockchain works. Okay, so this is how the blockchain works. Now it works in a kind of way whereby when a new transaction is being entered, okay, the transaction is then transmitted to a network of peer-to-peer computers scattered across the world, and that process is known as mining. Okay, like different nodes around will need to solve this equation, this mathematical equation. Okay, like if you want to send a coin, let's say you want to send 1 Bitcoin to someone, or 0.002 Bitcoin to anyone around, you're in Nigeria and this person is in UK. All right, once you've gotten this person's wallet address and you send the coin, okay, it goes down to the blockchain, and this transaction needs to be confirmed, it needs to be verified, it needs to be stored, and after it has been confirmed, it is going to be distributed to everyone on the network. And that is why we say the blockchain is a distributed ledger, where all that word distributed, it means that everyone, even I seated here, I will get a copy of that your transaction on my own block. Okay, and that is why if you send 1 Bitcoin to anyone around this in the world, anybody, and I can easily see the transaction, okay, because the blockchain is an open source technology. But the encryption right here, where we talk about the security, highest encryption, security, and anonymity comes in the sense that the anonymity, I do not know who is actually sending out this coin. I do not know who is actually sending out this coin, okay? Because there is nobody's name attached to it. That is the security, because your privacy is being secured when you're making use of blockchain, when you're sending any transaction out, making use of the blockchain. Okay, it's not like my normal bank account whereby I want to send you $1. All right, when I make the transaction, I will still have evidence to prove I sent you this 1,000 or $1. All right, it will carry my name, Maurice Edet, transferred so and so amount to so and so person at the time and all of that. But on the network, on the blockchain, it has to do with the transaction hash. Okay, from there you will see that this amount was transferred from these digits, which is a wallet address, to another wallet address. Okay, there's no name embedded in it. Now, this network of computers then solve equations to confirm the validity of the transaction. Okay, that's the mining process. So once confirmed to be legitimate, okay, they are clustered together into blocks. Now these blocks are chained together. All right, these blocks are chained together, creating a long history of all transactions that are permanent. The transaction is completed. All right, and that's why one could easily check on. Let me show you something. We'll go over to the blockchain. Let me show you how it looks like. Okay, let's go to bscscan.com. Okay, BSC scan. All right, this is an explorer for BSC network. That's the Binance Smart Chain. Okay, so let's go and check on transactions happening at the moment. Okay, I want to show you how the blockchain looks like. All right, so you can see this is these are transactions. You can see it is written from to, like, these are transactions, and these are their transaction hash. This is the transaction hash where you can use to check if this transaction was actually successful. All right, so when you click here, let's click on the very first one. You see that this person sent this right here from where you see where you're seeing this from. Look at the screen, you see where it says from. All right, it means the sending happens from that actual wallet, from that wallet. Okay, and if we go ahead and copy this is the transaction hash, the very first one with the question mark. That's the transaction hash. That hash stands as your proof of payments. Okay, that's the proof of payments, and the status over here is showing you that it is successful at the moment. Most times it shows pending. Okay, when the network is highly congested. From it's showing you the wallets the funds was being moved from, and right here it's showing you the timestamp. It's showing you the time frame when the transaction was actually carried out and the transaction fee. Now, what value of coin was being transferred at the moment? It's showing you 0.32 BNB was transferred. Okay, so that's just a little bit about the blockchain. So we move over to the fundamentals of cryptocurrency. All right, so we know that Bitcoin is the first digital decentralized electronic peer-to-peer payment network. So unlike traditional payments, there is no intermediary like a central bank. Okay, if I'm sending a coin to you, I do not need to know what kind of wallet you're making use of. I do not need to go into the bank to go queue. I don't need to go into the bank to go queue until I can make transactions. Okay, activities and balance are stored on a public shared ledger called blockchain. The blockchain is open. It's an open source technology. It's open to everyone to view. All right, but in as much as everyone can view it, there's nobody's name there. My name is not there on the blockchain. Okay, where you would see this is Maurice accounts. All right, you only those who can check my wallet address can actually go to BSC scan or bitcoin.org to like key in my wallet address to carry the check. And when you do that, you're actually going to see the value of the words of my wallet. It is open, anybody can check it. All right, transactions are verified by thousands of computers called nodes. That's in the process of the mining verification, verifying the transaction. So these nodes are responsible for maintaining the network across the world, the globe at large, through a term known as mining. I told you that. So that mining is mainly verification of transaction, and when you get to verify this transaction, you earn those coin, that same coin you're actually verifying. And this verification process, this mining process, is actually being done by huge machines, and that's why we have farms. Okay, we have farms across different countries. These farms are being used. We have mining farms. Okay, these farms are actually being used to, confirm transactions. Okay, so now we'll go into the difference between fiat and cryptocurrency. So on the fiat money, fiat is actually issued and controlled by the government. Okay, while cryptocurrency asset, is not issued by the government, it's issued by individuals who, after a period of time, they give out the ownership, like it becomes decentralized. Okay, another difference is that it is tangible. The fiat money is tangible and has aspects, and might have aspects of electronic form. Okay, what that means is you can touch, feel, and see the physical cash, like your $1, your €1, your 1,000 naira. You can see this money, you can actually touch it, and you can have the electronic form of it, where you can make use of mobile apps. Okay, your first bank mobile app, you can actually use it to transfer funds to another users, another bankers, or another customer to a different bank account. You can actually use it to transfer. But on the cryptocurrency aspect side, okay, it's not tangible. You cannot see Bitcoin with your naked eyes. Like, you can't see the cash and touch it and feel it. Okay, you can't feel it with your bare hands. You can't even see it. You can only see these digits in your wallet. It actually numbers. Okay, so cryptocurrency only exists in a digital form. Now, on the government's issued fiat, the fiat money, remember your fiat money is the normal currencies we are holding. The normal naira, dollar, pound, sterling, and Ghana cedis and all of that. Okay. Now, these fiats do not have limited supply. Okay. I bet you dollar is being printed almost every time. Okay, they keep printing it. All right, but when it comes to cryptocurrency, there's limits. There's a limit to it, and once that limit has been reached, it cannot be created again. It cannot be mined. So Bitcoin has 21 million Bitcoin as its total supply. But what we have in the market in circulation is 18.8 million Bitcoin actually in circulation right now. Okay. On the other part, the fiat money is controlled by a central body. Okay, so we have the Fed, like the Fed in USA. We have the central bank. Okay, central bank in Nigeria and other countries. So this is the sector that actually issues out this money. All right, they're the ones that disperse this money to other banks and all of that, and look over the monetary aspects, of this money, of the fiat money. While in cryptocurrency, everything is decentralized. No single point of control. All right, no one is in control, especially when it has to do with the Defi. All right, Defi projects. No one is actually in control of these currencies. Okay, now the last difference here between the fiat and cryptocurrency: fiat money is pegged to a specific country, all right, and you cannot use that money that is pegged to a specific country to buy or sell or trade in a different country. Okay, you need to like make sure you have a bank account before you can transfer that same currency to a different country. What I mean is, for instance, in Nigeria, we make use of naira, right? Other countries, UK, make use of pounds. All right. Now, if I want to send money to someone in USA or UK, it might be hard because I'll need to I'll need to convert my own money, or I go to the bank to make use of Western Union, and this is going to take way longer. All right. And these currencies, I cannot send my naira to someone in America just like that. I need to convert it because my own naira is pegged to my country alone. I don't know I don't know if you're getting me, because naira cannot be used in Ghana. All right, when you get to Ghana, you need to change your money to Ghana cedis. All right, so when it comes to cryptocurrency, cryptocurrency is borderless. All right, it is not pegged to any country or region. Bitcoin is used all around the world. Okay, the same Bitcoin I have is the same kind. The same Binance wallet I'm using would be the same Binance wallet anyone around the globe will also use, or you might use the different one, Binance.uk. Okay, so but all I'm trying to say is cryptocurrency is not pegged to the currency of any country. It's not pegged to any country's currency. So we move over to the types of cryptocurrencies we have. All right. So we have Bitcoin, we have altcoins, we have the stablecoins and token. Now, Bitcoin is actually the very first cryptocurrency created. All right. Now, altcoins. All right. Altcoins are coins that are alternative to Bitcoin. Most of them make use of Bitcoin algorithm and protocol. All right. So altcoins are generally alternate coins. All right. So in that alternate coins, we have stable coins, we have the main coins, and we have tokens. These are all coins that are not Bitcoin. Any coin that is not Bitcoin is an altcoin. Be it shitcoin, be it stablecoin, be it a token, it is called an altcoin. All right. So a stablecoin is a class of cryptocurrencies that attempt to offer price stability and are backed by a reserve assets, meaning they are coins pegged to the value of real currencies like dollar rates or any other top currency, okay, to protect assets from market volatility. So stable coins are coins. They are called coins because they have their own blockchain. All right. So we have the tokens. So tokens are cryptocurrencies embedded on other coins blockchain. What is a coin? A coin or coins are basically cryptocurrencies that stand as money and having their own blockchain technology. So basically, coins on their own part, they have their own blockchain. They operate on their own blockchain. And tokens, on the other hand, do not have a blockchain. Are you getting it? Coins do have their blockchain and they operate on their blockchain, while tokens do not have their own blockchain. All right. An example of token is Raka, Radium, Wakanda Inu, Shiba Inu, Bakery token, Pancake Swap token, Pick token, Save Moon, Baby Dogecoin, Flocky Inu, and the rest. And another set of coin we have again is shit coins. Okay, I did not include that here. But for those who have been hearing about shitcoin, so shitcoin actually refers to a cryptocurrency with little to no value, or a digital currency that has no immediate discernible purpose. So, and Dogecoin, for instance, is actually the first shitcoin created as at 2013. So you likely see them in billion, trillion, quadrillion, quintillion, septillion, total, and circulating supplies. You see like little rabbits, okay? There's a coin called there's a token, a shitcoin token called Little Rabbit. You see, it has, I don't even know, that's like, yeah, it has like it has like quintillion supply, okay? So these are coins that have little to no value, and if you're going to buy just one of it, just one single one, it has no value in your wallet. All right, because the value is 0.00000. That is why we refer to them as shit coins. All right, so we'll go into the differences between a coin and a token. So coins are used purely as a means of payments, while tokens doesn't operate on its own blockchain. Okay, a coin operates on its own blockchain. A token does not operate on its own blockchain. Rather, a token is embedded and operates on a blockchain of a coin. That is, it makes use of a coin's blockchain to operate. An example is BNB. Okay, BNB, Binance coin, is actually a coin, right? Another example of token is Wakanda Inu. All right, Fake token, Peak token, Save Moon, Pancake Swap token, Bakery token, Raka. All right, these are tokens that make use of Binance Smart Chain blockchain, as they are embedded on Binance Smart Chain. When we talk about Radium is a Solana token. So it is embedded on Solana. It does not have its own blockchain, okay? So it is making use of Solana blockchain to exist. When we talk of Shiba Inu is a token. It's an ERC token, ERC20. All right? So it is making use of Ethereum. It is embedded on the Ethereum blockchain, although they have plans to create their own blockchain. All right? So the main difference are the coin operates on their own blockchain, and they have their own protocol, and they exist on their own protocols. Okay, a token doesn't operate on its own blockchain. Rather, it operates on a coin's blockchain. I'll be showing you all these. I'll show you the coins when we get to market capitalization. All right. So we'll move over to the top cryptocurrencies as at now. So market capitalization and top cryptocurrencies as at now. Within the blockchain industry, the term market capitalization or market cap refers to a metric that measures the relative size of a cryptocurrency. So this market cap is actually calculated by multiplying the current market price of a particular coin or token with the total number of coins in circulation. So it is market cap equals current price That's the current price of one coin, of that whole coin. The current price of the coin times, that is multiplied by the circulating supply. So the list of the top coins by market capitalization keeps changing due to the constant change of price of asset. Therefore, a coin might be at the top 10 this week, but drops to the to number 20, or even number 30, or even 50. It might drop to the lowest 50, 60, or 100 the following week, or the following months, or yearly. Most times you don't even see, like Namecoin used to be at the top 3 as at 2013, 2012, but right now Namecoin is nowhere to be found. It's nowhere to be found at the top 20 cryptocurrencies. TRX, which is Tron, used to be at the top 5 cryptocurrencies, but today it is nowhere to be found around the top 30s, not even 20s. All right. So one might be asking, how many cryptocurrencies are there in the crypto markets right now? Okay, and we make use of an app called, or a page, or a website called coinmarketcap.com to actually search and understand more about this cryptocurrency, the crypto market. Okay, so there are over 15,000 cryptocurrencies. So we'll go into CoinMarketCap just in a bit. All right, so we'll type CoinMarketCap. That's it. We're going to the site. My network is okay. So it just loaded now, as you can see. So this is the CoinMarketCap. My network just loaded now. So over here where we have cryptos, you can see that we have over 15,000 different cryptocurrencies. All right, this CoinMarketCap is actually a site where you get to understand everything about the crypto space. So many things. Okay, you get to know how many exchanges we have, both decentralized exchange. You get to know about centralized exchange, the total market capitalization of the crypto market. When we move over to this 24-hour volume, that's the trading volume for 24 hours. Okay, the dominance is actually showing you the largest coins dominating the market, which is 40%, 40.6% dominance for BTC, while Ethereum has 21.5% dominance, and the gas used. All right, so this is right here. You can see that we have over 15,000 cryptos. When you click here, when you click on that 15,000, it's still right here. It's going to show you the list of cryptocurrencies. Okay, now when I talking about the market capitalization, you can see that Bitcoin is actually at the top, is number 1. Okay, remember I told you to calculate the market capitalization. It is the current price, which is $49,727, multiply it by the circulating supply, which is 18.8 million BTC. This will give you the market cap, which is right here. All right, this is the market cap right here. After where we have these 12% showing on red. Okay, so now one thing about the market cap is that coins are arranged according to their strengths, according to their market cap. The higher the market cap, the higher the position, the higher the ranking. All right. So you can see here that Bitcoin market cap is $94 billion. All right. You can see Ethereum is at 498 billion. Bitcoin is 941 billion. All right. Binance coin BNB is at 98 billion. Tether, which is a stable coin, is at $76 billion. So the more the market capitalization, the more strength it has, the more momentum, so it goes up. Shiba Inu is at $19 billion. All right, and these are their trading volume, their 24 hours trading volume. So you might wake up tomorrow and you come over here to the coin market cap and find out that Polygon is not at number 14 again. Don't be surprised about that, okay? You might come over and check that Polygon or this avalanche, right, is at number 12 today while making this video. You might come back next tomorrow or 1 week or 1 month's time to see that it has fallen down below 20. Tron used to be at number 4, but now it is not among the top 20s. Okay, it's at 22 now. It has come up again. So that's how the market cap works. Okay, so basically that is how it works. So we'll go back to the class. So we'll talk about the advantages and shortfall of cryptocurrencies. So cryptocurrency actually puts you into control of your own money, making your money work for you over time. What that means is when you invest in cryptocurrency, you buy a coin, you're hoping to make gains from this coin at the long run, not just you buy a coin today and you believe that it's going to moon in the next 3 hours or in the next 1 week. You understand? You're going to hold that coin and that is how it's going to work for you. Censorship resistance. Okay, governments cannot control your money or monitor your wealth when you're making use of cryptocurrency because it is decentralized. You own your own wallet. You know when to make transfer of your coin or whatsoever. You can store your money in a piece of paper, thumb drive, or phone software wallets. We'll get into that. I'll be listing and showing you the different wallets we have, the difference between the hot wallet and the cold wallet, the software and the hardware wallet. Okay, so when we say you can actually store your money in a piece of paper, we actually mean writing down your seed phrase in a sheet of paper and keeping that book very safe. So even if you lost your phone, so long as your phone is locked, you understand, you can always have access to your funds. Okay, so another advantage of cryptocurrency is that it is borderless. Like I said the previous time, you don't need to start changing the money into a different currency to send it. Okay, it is borderless and it is censorshipless, censorship resistance. Okay, borderless in the sense that I can stay in Nigeria and transfer USDT, BNB, Solana, any kind of cryptocurrency. I can stay here and transfer it to anybody in any country, and I can also stay here and create. Cryptocurrency is open for anybody to create. You can create and renounce ownership, so it is borderless. All right, and the transaction cost is much lower than transacting through your bank. All right, and it is way faster. It is faster because If you want to send money to somebody in UK making use of Western Union, it will take days. Most times it takes 3 days or thereabouts. All right, but with cryptocurrency, you can send in just seconds. You can transfer BNB to anybody in just 1 minute. Bitcoin can go through in 9 to 10 minutes. All right, it is permissionless. You don't need anyone to tell you to give you the authority to do your transactions, to carry out your transactions. Okay, it is permissionless because it is decentralized, no control over it. All right, so the disadvantage is the shortfall. Cryptocurrency is actually very volatile. You could see a trade right now, like 1 minute is up, second minute it's going down. I'll show you something. Move over. Let's go to let's go somewhere. Let me show you something in Binance. So to understand the volatility in the markets, to get you acquainted, um, let's go to. Let me show you how volatile the crypto market is. Okay, let's go to trade. Um, BTC USDT. Okay, let me show you something. BTC. Okay, this was. Let me show you how. What we mean by volatile. Okay, let's go into the charts. All right, so this is a chart of BTC as at. Okay, let me check the time frame. This is 1 minute, so I'll be putting it in. I think 15 minutes will be okay. All right, so let's go. Let's go back in time and see what happened. Let me close up this chat a bit, and I want to show you something very sharp. Okay, all right, this is it. So clicking on these dates, you would see something happened here. This was as at 6 a.m. on this very day. So this is the day. I think. Okay, this was as at. On the 4th of December 2021. Okay, just within few minutes, this is 45 minutes. In 45 minutes, Bitcoin dumped hugely from all the way from 52,200. It dumped within. It happened like a flash. You get. So this is to show you how volatile the market is. Liquidations were everywhere. Okay, you see, it went down from 52,300 down to $42,000. Can you imagine? That is 10,000 gone. $10,000. It lost its value. It lost $10,000 value like within 45 minutes. In just 15 minutes, it lost. Let's come down here. From here, it went down from 49,000 to 42,000. All right. So it lost over 5,000 in just 15 minutes. So that is how volatile the crypto market is. Like, it goes up, it comes down at and takes you on away. Okay. There's lack of regulation, which has opened doors for scammers in the crypto space. since there is no regulation as to who is qualified or not to create cryptocurrencies, to create these coins, there are fake projects out there, exit scams, who just come up, run an ICO, and since the crypto space is mostly DeFi, decentralized, so they just come into the crypto space, create one or two coins, and scam people and vanish into thin air. Okay, so and most persons do carry out transactions because of the high anonymity of cryptocurrency and get others scammed. All right. So we have this capacity and scaling issue. Okay, very rigid. The especially the Bitcoin network is very rigid to navigate through, and the mining itself consumes a whole lot of energy. All right, it consumes a whole lot of energy just for the mining processes to confirm these transactions on these different farms. Okay, on the mining farm, remember when mining, they're actually making use of highly sophisticated machines, computers, hybrid computers, to actually break down these mathematical equations, these mathematical kind of formulas to confirm these transactions. So these machines actually consumes loads and loads of power. So we'll move into the storage, and here we'll be talking about how to store cryptocurrency, how to get these cryptocurrencies, and how to store them on your wallet, and wallets that are meant for storing and saving and holding cryptocurrencies. Okay, so cryptocurrencies are stored in secured wallets, and we have the software wallet. Another name for a software wallet is called the hot wallets. All right, I see most persons get confused because they think when they are talking about the web wallet, they think it's very different. It is not very different. A web wallet is just like an extension, okay, where you have to install your MetaMask on your web browser on Chrome. All right. So it is also like a software wallet. So they are all inside. They are categorized under the software wallet. So a hot wallet is also a software wallet. We have just two kinds of wallets. We have the main types of wallet we have are just two types: software wallets, or you call them hot wallet. The next wallet we have is the hardware wallets, or you call them cold wallets. So I'll be starting from the software wallet to explain. Okay, so software wallets are wallet software that can be installed on your computers, your phones, your gadgets, or accessed directly online. All right, you can access your software wallets from apps. You download these apps on Play Store. For instance, Trust Wallets. You can download your Trust Wallet. You can download MetaMask. You can download Binance, Digifinix, KuCoin, OKEx, and the rest. All right, they are all classified as software wallets. Now, we categorize them again into they have another subcategory where we categorize them again. All right, and that's where we divide them into custodial and non-custodial. All right, now it is very, very simple to understand. Okay, it is extremely very simple to understand what a custodial and non-custodial wallet is in the software context. Okay, now non-custodial wallets are wallets that do not take custody of your passwords. Let me use the word password for those who are absolute beginners. Okay, but the main word to be used there is your seed phrase, your 12 phrase, your private keys. So a non-custodial wallet, as the name implies, this wallet is actually telling you, I am not taking custody of your wallets. Please, that is what the wallet is telling you. Custodial wallets are telling you, I am taking custody of your wallets, like it or not. Non-custodial is telling you, I am not taking custody of your wallet phrase, like it or not. What this means is that these are wallets, non-custodial wallets. They are wallets that once you download them and you run them on your phone or your laptop or anywhere, you will get to see a 12 phrase. We'll get into that, okay? Where you download, you write this 12 phrase, most times are 24, okay? Algo wallet has 24 phrase, over 20 phrase, okay? Words, you can see John, Peter, phone, monkey, bridge, journal, Mary, item, hardware, are, very, see, just like that, okay? Into 12 words. When you copy these out, this stands as your pass phrase. This is your password. And anybody who sees that your private key is actually the owner of that wallet. It shouldn't be confusing, okay? Non-custodial wallets they don't care about your wallet. You are in custody of your wallet and your wallet's security, okay? They will give your phrase to you and you make use of your wallet. So when you have it, let's say you have Trust Wallet on your phone and you mistakenly, let's say you have money, you have coin, let's say you have 10 bits coin in your Trust Wallets and you've written down your phrase. Maybe you saved it on your phone and your phone got stolen. Forget about the wallet, you've lost it forever. The same on MetaMask, the same on Token Pocket. There's nowhere on X, I don't know. Maybe there will be other technologies to actually break these, all right? But so long as the blockchain is involved and these wallets, they are embedded on the blockchain directly, all right? So when you lost your wallet's keys, if you want to log into a new phone, if you have a new phone, you need to make sure you have those 12 phrases complete. If not, you're not going to make use of that wallet. It's not yours again. It has gone. Now, custodial wallets. These are wallets that are in control of your coin. Like, they won't give you your seed phrase, okay? You will only have a password to them, and that is why if you lost your Binance password, you've forgotten it. So long as you have your mobile number, the mobile number you use in registering, you can simply just go there and you click on forgot password, and they will ask you for your email accounts, email address, and you put your email address and you put your phone number and you get a confirmation and you restore your password. Simple. The same on KuCoin, DigiPhoenix, OKX, MEXC, Albi, Bybit, and the rest. But when you go to Trust Wallets, since Trust Wallet is not holding your seed phrase, they've shown it to you. You're left to write it down and keep it in a very safe place. If it gets lost, that is the end. So, under software wallet, we have it encompasses of it. It has to do with anything, any wallets. We have all those wallets you can link on your browsers. They are all software wallets. Okay, so now we go over to hardware wallets. When you are taking out your coin from the software, from the net, okay, and you're putting it cold, that is the hardware wallet. All right, hardware wallets are like hard drive, flash drive. So hardware wallets are very secure because the transactions do not take place on the computer. Instead, they take place in the hardware wallet itself. So we have Trezor wallets, Ledger Nano S, and we have the Keep Keys, etc. So Ledger Nano S is actually one of the toppest and one of the strongest hardware wallets in the market. Okay, so what you're doing here is that you're taking your wallets, you're taking your coin. Let's say you have Binance coin and you want to save them on your hardware wallet. It means that you're taking them off the software environment and you're saving it and you're holding it on a hardware wallet. So what will happen is that those coins will be saved on your hardware wallet and they'll be saved there. All right. So to really identify what I'm saying, to really understand what I'm saying, okay, we'll still go over to coin market cap, where I'm going to show you an example of what I'm saying for your understanding. Okay, so just get this at the back of your mind. Custodial wallets are exchange. Okay, they're like exchange wallets. In short, they are exchange. Any custodial wallets is an exchange where you can actually go there and trade. You understand? You can trade Bitcoin, USDT. You can trade all those pairs on this exchange: Binance, KuCoin, DigiPhoenix, Bybit, Albi Global, Gates.io, OKEx, and so on. Okay, but you cannot trade like that. You cannot trade and see charts, okay, on your Trust Wallet or MetaMask. All right. So this is an example of an hardware wallet. This is how it looks like. This is just how it looks like. Okay, this is the Ledger the Ledger wallets. Okay, Ledger Nano wallets, and the Trezor. The white one is actually the Trezor wallet. You can connect them to your laptop, connect it to your laptop, and that's when you can actually use it. So let me show you how this looks like on, if we go to Play Store. If we enter Play Store, I'm going to show you how it looks like. Most of these wallets look like on. Let me show you example of wallets. Okay, so we have number one, Trust Wallet. Okay, Trust Wallets. You click on search. This is Trust Wallet. This is how it looks like. Okay, we have MetaMask. Even if you just write Meta, then you put M, all right, it will search. This is it. All right, this is MetaMask. Okay, this is how it looks like. These are all non-custodial wallets. All right, when you go over to custodial wallets like Binance, all right, these are custodial wallets are actually exchange platforms where you can trade. All right, you can trade Bitcoin, you can trade BNB, you can trade whatever coin you want to trade. So that's just it about the coins, about the wallets. All right, so we move over to private keys. What is a private key? So your private key is your only security to a non-custodial wallet. Like I told you guys, I told you about. I can scroll. I can enlarge this. Okay. So when you look at these pictures, this picture is gotten from. These pictures are gotten from a Trust wallet. Okay, the one on my left. All right. So it is showing you how the private key looks like. They are 12 in number. That's a seed phrase, how it looks like. Okay, so once you've logged into your Trust wallet, you create a new wallet, you save this 12 phrase, these 12 keys. It stands as your password to your wallet. And this right here, most wallets don't make use of seed phrase, rather they make use of private keys, a very long string of words. Okay, they put letters, alphabets, they put alphabets, characters, and digits, mix them up, and that becomes your private key. Okay, so you make sure that you copy it down and you keep it in a very safe place. So we move over to the wallet address. All right, so wallet address is what you need to receive coin. It is more like your bank account number to receive money. Okay, and one thing you should know is that your Bitcoin address is different from your Binance Smart Chain or Solana. All right, your address is here. They are different from they are different on different wallets. Now, if you're sending Bitcoin to your wallet address, you need to go into your Trust wallet. If you have a Trust wallet, for instance, and you copy out your Bitcoin wallet address, and you make sure that you send Bitcoin to that Bitcoin wallet address. All right. Do not make that mistake of saying you make a mistake and you copied out a BNB address and you want to send Bitcoin into it. Okay, that's wrong. All right. So just know that a wallet address is what you need, is a string. Okay, that you need is an address or a string of combined words, alphabets, and digits. Okay, where you can actually use to receive payments for goods and services. All right. And it is also known as your public key. It is public. You can send it to anybody. There's no problem. But you see your private key and your seed phrase, keep it to yourself. Do not show anybody. Do not give it. If anybody comes into your DM and messages you for something and asks for your seed phrase, block the person. Okay. So, in this section, we'll talk about the cryptocurrency exchange. All right. In two contexts, the SEX and the DEX. So a cryptocurrency exchange is a digital currency or a digital currency. A currency exchange is a business that allows customers to trade cryptocurrencies or digital currencies for other assets such as conventional fiat money or other digital currencies. And the type of exchanges we have the SEX, which is the centralized exchange, and we have the decentralized exchange. Okay, so when we are talking about decentralized exchange, we mean that decentralized exchange, when we are talking about a decentralized exchange, a non-custodial exchange, we are referring to a non-custodial exchange where trades are executed on a specific blockchain network. Example, PancakeSwap, Uniswap, Orca, Radium, Bakery Swap, Sushi Swap. We have Clay Swap, OX Protocol. We have which other DY, DX. We have 1inch and Uniswap version 3, version 2, and all of that. Okay, so decentralized exchange are platforms where you can trade directly on the blockchain on a non-custodial wallet through your DApp. All right. Since you cannot trade, since you cannot buy coins on your non-custodial wallets, on trust wallets, okay, where you can actually buy this coin is to make use of your decentralized exchange. If you want to buy a coin, let's say you want to buy SafeMoon or Wakanda Inu, or you want to buy Sparta or any potential coin of your choice, what you need to do is you need to have BNB and you go to PancakeSwap. All right, or you go to bakeryswap.com. When you use that, right through your DApp, that is where you can actually exchange your BNB for any BEP20 token. That is on a decentralized exchange. Now, centralized exchange. See a centralized exchange as a custodial exchange where you can trade on multiple blockchains. Example, Binance, KuCoin, OKEX, DigiPhoenix, Hotbit, Gate.io, Bybit, etc. Okay, So the concept is very simple. These are actually exchanges. Okay, do not confuse it with the wallets we have. We have the non-custodial wallets and the custodial wallets when it comes to the software aspect. Okay, but when it comes to exchange, we have decentralized exchange and we have a centralized exchange. A centralized exchange automatically is a custodial wallet. All right, it's an exchange found on a custodial wallet. So we make use of centralized exchange on custodial wallets. So this is where you can trade Bitcoin, you can buy Ethereum, you can use just USDT to buy all these different blockchain coins. Okay, so that is just the concept of decentralized or centralized exchange. Okay, so we move over to knowing these centralized exchanges more. All right, so the difference between a centralized exchange and a central and a centralized exchange. Okay, these are the properties. Okay, the components. What makes an exchange to be called a centralized exchange? Okay, they have centralized office, like an outlet. You get Binance has an office in China. Okay, and almost every centralized exchange request for KYC mandatory. It is very, very mandatory to do your KYC before you actually use their platform. Okay, so what is KYC? KYC actually means know your customer. Okay, so it's a process whereby you make use of your ID cards, your driver license, or any form of identification to actually register and get verified. All right, on Binance, you need to make use of your either voter's card, your national ID card, or your driver's license to get verified, to make you access features meant for verified users. Excuse me. And without doing this, you might most times find it difficult to withdraw your funds from the exchange or even deposit on the exchange. Now, another feature of a centralized exchange we are having is global restriction. Okay, currently Binance is facing some global restriction from some countries. All right, and that is really a problem because most exchanges, most countries have banned cryptocurrency, and if there has been any cryptocurrency outlets or centralized office out there, that office is forced to close down for the moment, and there's no freedom and privacy because your seed phrase is actually with Binance. All right, your seed phrase is actually with them. You'll never see it, and there's an amount of fund you can actually withdraw or deposit daily. You can't go beyond that limit. If you do, then most times these exchanges can just lock up your funds. If they notice anything fishy about your accounts, about your wallet, they lock up your accounts for a specific period of time. So you're limited to that. You're limited to freedom of doing whatever you want to do. Okay, there's limits whenever you're making use of a centralized exchange. There's limit to what you can do. There's no complete freedom. All right, where you think you can do whatsoever you want to do. You cannot do anything you want to do. Okay, there's there are times you might need to trade self. All right, like on Binance, and they tell you they are going for an update, one thing or that. Okay, and you won't be able to trade at that moment. Now, the customer support and protection is intact. Like when you message them to lay a complaint, they will respond to you and they will instantly Within 24 hours, they will try to like sort out your issue. Okay, having in mind that they want to keep a good record. All right, and they have fair pricing. Now, coins, when you're trading on centralized exchange, there's no slippage. All right, and if there is, it's very low. They charge to actually swap from one coin to another to buy. That trading process, the charge is very minimal. Okay, for instance, if you're trading on Uniswap, let's say you want to swap Ethereum to a different coin, to any coin, you'll be paying for gas fee just for the swap. All right, you'll be paying a lot of but when you try this on Binance, you want to sell your USDT or your Ethereum to USDT, it will go through with a very small amount. The fee will be very minimal. Okay, it's very reduced compared to what you'll be spending on a decentralized exchange. So when we go over to decentralized exchange, we are seeing the opposite of almost everything, because there's no centralized office, since no one is actually in control of it. All right, these exchanges control themselves. They've been programmed that way to work that way automatically. All right, they don't have a representative, and you don't need KYC to operate or to swap coins on PancakeSwap, 1inch, Uniswap, and all of that. All right, there's no global restriction when it comes to decentralized exchange. Anyone can wake up and do whatever. Okay, on the centralized exchange, you can't list your coin. You can't just wake up today and go to Binance and list your coin and say, yeah, I want to list my coin. Okay, my coin name is Morris Crypto or Morris Coin, and I'm going to list this coin, and I'm going to create this coin and list it on Binance. No, it's not done that way. I might not be allowed for the next 10 years. I might not be allowed to list my coin there. But when it comes to decentralized exchange like PancakeSwap, I can wake up tomorrow. If I can create a coin, I can wake up tomorrow and create my own coin, or anyone else wakes up tomorrow, creates his or her coin, and get it listed on PancakeSwap within 2 seconds. It won't even take long. You get it listed. So, and that's the aspect of the freedom. It renders freedom and privacy. Okay, and anyone can just list whatsoever he or she wants to list, create a coin. And that is why when you look at the space right now, we have too many scams in the DeFi sector, in DeFi, because everyone wants to be a creator. Everybody wants to be a developer, and you see, and that's the cost of the high rates of coin and scam we are having a little bit in the crypto space. So there's less customer support. Of course, anything that is decentralized, no one will want to come up and take responsibility for any failures. All right, so there's less customer support. When you have a problem, it takes a longer time, or it's hard to rectify. Okay, so high pricing. When it comes to slippage, the slippage tolerance, you're being charged high, very high. If you're swapping a coin on 1inch or Uniswap, you want to swap an Ethereum coin to another kind of token, it's going to cost you lots of Ethereum for gas fee. All right, so in this section of the class, we move over to DeFi. And DeFi is actually a very broad topic in the crypto space, and I'll be making a separate video where I'll be discussing about DeFi and in-depth context of DeFi. So for the purpose of this class, we will just take into DeFi a little bit. All right, so short for decentralized finance, DeFi is an umbrella term for a variety of applications and projects in the public blockchain geared toward disrupting the traditional financial world. Inspired by blockchain technology, DeFi is referred to as financial application built on blockchain technologies. So that takes us to dApps. Okay, okay, we'll first explain these DEX. Like I've already explained the DEX, the decentralized exchange. Okay, it's like an anonymous system that completes traditional financial transaction without any use or interference from any intermediary or governing body. Okay, so that also refers to DeFi. Okay, now look at DeFi this way. This DeFi means that in DeFi protocol, it means that no one is in control. All right, no one is in control in listing of projects in whatsoever happens. So on DeFi, you can, let's say you want to borrow money, for instance. You can actually borrow money and at the same time intend to get back your money. Since there's absolutely no control, it's very possible. So unlike the banking sector, like the banking system we all know, it will take a very long time because they'll need to go through some stages to process your withdrawal. Since you gave them a specific time, in short, you need to be abiding to that specific period you had given them. But on DeFi, it's quite different. And dApps are actually apps built on decentralized platforms. Okay, so these dApps are actually decentralized applications, also known as dApp or dApps, are digital applications that run on a blockchain network of computers instead of relying on a single computer. So because dApps are decentralized, they are free from the control and interference of a single authority. Excuse me. So you can see these dApps when you get to your Trust wallet, like it's a kind of browser. Okay, to understand more about these dApps, it will be okay and very simple if or once you've understood the concept of centralized exchange. All right, in centralized exchange, you're trading right on the app, like you're using Binance, you're not browsing anything. All right, but when you get to Trust Wallet, since it is a DeFi protocol, Trust Wallet is embedded on a DeFi protocol. Okay, MetaMask the same thing. So you need a dApp, a decentralized application, and that is where we start having Pancake Swap, Sushi Swap, Clear Swap, Uniswap, Radium. These are all DeFi and DEX. They are DeFi protocols. These are all DeFi protocols to enable you trade on the various different blockchains without issues. All right, so we'll go into the functions of DeFi. So DeFi helps in creating monetary banking service. Example, issuance of stablecoins, providing peer-to-peer or pooled lending and borrowing platforms. Okay, it also enables advanced financial instruments such as DEX, tokenization platforms, derivative, and prediction market. Derivative refers to futures markets. Okay, trading futures contracts on Binance. All right, so I think this will be, we are getting to the end and we are left with just few topics to touch. So these are actually scams to avoid in the crypto space. There's a link I left in the description where you can join. There's this Telegram channel where you can join to learn more about scams in the crypto space. Okay, you get to learn so many scams on the crypto space. As beginners, you need to understand that for the fact that cryptocurrency has, taken up to a very larger height. So many persons are up and steady, like to run scams. Okay, so the very first scam here on the list we have is account takeover, whereby someone might message you. You might be in a community and someone message you on that social media community, trying to tell you about airdrop and all of that, and asking for your seed phrase. Remember, whoever is with your seed phrase, if you're using if you're using a non-custodial wallet, whoever sees your seed phrase for Trust Wallet becomes the automatic owner of that wallet. So one thing you want to do is you don't want to let anybody see your seed phrase. We have fake mining sites where you be scammed of your coin. They might tell you, they have some coins you could mine easily for free, or you pay for these coins. Okay, so once you start mining these coins, it looks as if you're mining. All right, the trick is, once you've mined to an extent and you are due to withdraw, when you click on the withdraw, they'll ask you to pay a certain amount of coin. Let's say you are mining Dogecoin, all right, or Tron TRX. You'll be asked to pay, let's say, like 200 Tron to withdraw just how many Tron, or to upgrade your accounts. And when you do that, those funds are actually gone because you will not be upgraded, and you might not be able to log into the accounts anymore. Okay, so we have scam crypto vendors. Okay, these are people who parade themselves on WhatsApp, Telegram, coming into your DM that they have coins to sell. Most times they don't have any coin, and at the end you might pay them money to buy. You might send fiat to them and they decide to block you. All right, we have airdrops. We have so many things, so many scams in this space, which as a new investor you need to be mindful, you need to be careful, you need to be watchful, and do your own research about scams. Okay, there's this airdrop where you will send a certain amount of coin. It's mostly on the Binance Smart Chain network, okay, where you'll be asked to send just gas fee, and this gas fee is not even expensive. If you convert it to Nigerian currency, it's like 15 naira, 60, 80 naira, most time 35 naira. Okay, and you partake in the airdrop. You copy the contract address, you go to your pancake swap, you go to your Trust Wallet, on your DAB, and you just paste it and you partake, and they deduct just a little gas fee. And at that moment, once you've done that, most times these airdrops are scam, and you've opened the doors to them. The contract address of that token has been linked to your Trust Wallet, and this could help that coin spend your token even without your knowledge. Okay, and that is very dangerous. We also have pump and dump schemes, whereby most persons come over, create coins, and you buy those coins, and at the end of the day, so many people will start withdrawing, but they will go with a very larger amount because they were the ones who created this coin, and they have like 70% of the total supply kept to themselves, while other people will just start buying. They withdraw the liquidity, or they take out much amounts of the coin. All right, so pre-sale exit scam. All right, this is so sorry guys, I was explaining the pre-sale exit scam. So this is actually, like I explained earlier, someone comes up, a team comes up and list a coin for pre-sale to meet up an ad cap. Okay, so once investors try to buy this coin, at the end of the day they buy the coin and they send BNB to a BNB address, to a BSC address for instance, and the developers of this coin end up not adding liquidity to the liquidity pool for these coins to actually have value, for the tokens to have value. Okay, you see, they rug pull, they just disappear into thin air, gone with all the investors' funds in the project. Okay, so we have number 7. We have honeypot's crypto scam. This is one of the trending aspect of scam in the crypto space. Okay, honeypots are actually coins that you can buy. When you buy them, and I can tell you, for almost, if you go to PancakeSwap, PuCoin.app, sorry, when you go to PuCoin.app, you see that coins are created every minute, almost every minute. In a day, we have over 100 coins created. All right, and that is why majority of them are not listed on CoinMarketCap. Some of them come up and they just last for 2 days. After a scam, they rug pull. Okay, now honeypots, what happens with an honeypot is that their contracts will glitch. Okay, and you can only buy this coin, but you cannot sell them. When you buy the coin, you will not be able to sell this token out. You can only buy the token, but to sell it will be very hard. There's no way on X you can sell it, because as you're buying it, the contract address is automatically blacklisting you from selling. And when that happens, you're holding a coin without liquidity, because the developers of this coin would go back and remove liquidity, and you're left with nothing. Okay, so we have Ponzi. Any platform coming up telling you to invest in cryptocurrency on Ponzi, just know it's a scam. Scam investment sites where people come over to new investors in the crypto space, and you see someone telling you, coming into your DM, either on Telegram or WhatsApp, telling you if you give him $500, he's going to trade on their exchange platform, which may have no name, that they are going to trade for you and turn that $500 to $5,000. That's a scam. Okay, do not fall for that. If it was actually very simple for that person to turn $500 to $5,000 in 7 days, he or she will be doing it for his family member, and wouldn't even want to let anyone know about it. So just know it is a scam. The best way to do that is to invest by yourself. Okay, you need to learn how to invest in cryptocurrency, and you need to learn how to trade by yourself. All right, so doing this, you need to keep yourself away, will help keep you away from scam. All right, so we have another scam again. This is scam escrow groups on Telegram and WhatsApp. This is very dangerous. When you go to Telegram to buy coins, all right, you go to Telegram and you try to buy cryptocurrency from this Telegram channel. The next thing they can do is to remove you after you've made your payment. The admin of the Telegram channel or Telegram group removes you after you've made payments. And the funny thing about Telegram is, once you're being removed from a group, the group disappears right in front of your eyes. Like, there's no way you're going to find that group again. If you search it, you're not going to see it, except you search from a different line. And there's no way you can report the group. Okay, there's no way you can actually report the group, because you cannot join the group again. You don't even have contacts of members on the group for you to alert them. All right, so that is why I tag Telegram as one of the worstest place to buy cryptocurrency. Okay, do not fall for that crappy scam, because it's a very crappy scam. Why would you be buying cryptocurrencies from a platform whereby if you're being removed, the platform deletes automatically and you do not see anything about the platform? All your messages can be wiped off, thus irrespective of the fact that you were an active member on that platform. The admin could easily just click on one button and 1,000 messages you've been sending on that group will be deleted, and nobody will even see traces of where you made payments to the admin, okay, of that group. So be very careful while making use of Telegram. Do not buy anything from Telegram escrow groups, except you're being directed by someone you know, all right, and he or she tells you, I have been buying from this coin, from this escrow group, you can buy and it is safe, all right. So we have ICO frauds. It's still the same thing as pre-sale exit scams. And we have scam WhatsApp TV. All right. Recently, I've gotten so many reports, so very many reports from WhatsApp TV, as in from newbies. They report to me about WhatsApp TVs whom they've gotten scammed. Okay, they pay money for coin and the person just disappear with their money or just block them. WhatsApp TVs. These are, of course, you should understand what I mean by WhatsApp TV. If you're on WhatsApp, you'll be seeing some persons messaging you, claiming to be having claiming to be running ads on their status, and they have followers, they have up to 5,000 views and all of that. Most times they will plan up, team up, have like a team of 7 scammers, and they will come over to you and they tell you, they post on their status. Of course, if they have 5,000 viewers, one person or 10 person or 100 persons might be interested in buying Bitcoin, and they post that they have a shop plug that sells Bitcoin and other cryptocurrencies. Okay, when you message this person, okay, you want to buy cryptocurrency, he's going to direct you to his or her friend who is a scammer, and once you send money to the person, they block you. That is how it works. That is how their scam, their exit, WhatsApp TV exit scams work, which you need to be very careful of. Okay, so we talk about the safety measures to protect your wallets from hacks and scam. Okay, so the very first thing you want to do is you want to ensure to back up your private keys or seed phrase. Write them down in a sheet of paper, in a book. Keep that book very safe. Put that book in a vault. Save it very well. Like, keep it very protected. Do not take screenshot. Almost many people like taking screenshot of their seed phrase. You take screenshots and you save it in your phone without backing it up. What if that phone gets stolen or lost or damaged? Everything will be gone. Okay, I've gotten reports, I've gotten messages from my students whom actually wrote down their wallet address, their seed phrase in a sheet of paper and now snapped it, threw away the paper, but just snapped the pictures and was saving it in his gallery until one day when he forgot, he was on his way and he was robbed. Okay, and he had so much crypto in that wallet, like till today he has not been able to get it back. Okay, so do not share your password and with anyone, including customer service staff. If anyone messages you and tells you I'm from customer service, no customer service will message you asking for your seed phrase or your password. Nobody will message you. Someone messaged me that day and was telling me, I was showing me chat he got from fake token. He showed me a chat he got from fake token and Save Moon from the community, and they were telling him they are customer representative. I told him to block them, just because these people will not message you. They won't message you first. They won't come to your DM first. And even if they do, they won't ask for your password. So always use 2FA, two-factor. That's two-factor verification in your exchange account. Okay, you can synchronize them with Google 2FA. All right. Use very strong password, at least 8 characters, with a mixture of letters, numbers, special characters. That's if you're making use of Binance. Okay, and do not disclose this to anyone. Avoid clicking random links online which you cannot verify their source. If you're not trading, store your cryptos off exchange to a wallet like Trust Wallet. Alright, just save your cryptos on Trust Wallet, MetaMask, alright, or Token Pocket. It saves you all the stress of losing your coin to whatsoever happens. Okay, so this will be all for today, and I want you guys to start downloading the app. You need to download and install Trust Wallets. All right, install MetaMask, download and install Binance Cryptocurrency Exchange and the MEXC exchange. Okay, these are the few exchanges you need to install. Okay, when you do this, then it is very simple to install. Just once you've downloaded the app, you just click on the Trust Wallet. You save your seed phrase. Once you've saved your seed phrase, you're good to go. That's all. All right. On Binance, there's a link in the description of this video where you're going to click and you register with my referral link. Okay, I have other exchanges where I trade, so you can also use those referral links to register on different exchanges. And once you've done that, it is actually very simple to set up your exchange. Okay, so once you've done that, you go ahead and get it verified. Do your KYC, okay, with your voter's card, name, or your driver's license. All right. So I have a PDF file where I'll be dropping on my group for the video. So you can go through it's almost the same thing. Like everything I'm saying here is almost the same, but there are so many things in the book, all right, where you can also read to understand more about what we've discussed today. All right, so this will be it for this session until we see some other time. In the next class, we'll discuss about trading. All right, so that's it. So if you stayed long till the end of this class, please give this video a thumbs up, subscribe to the channel, and turn on the notification bell to get more videos like this whenever I upload new contents. Thank you for your time.